headline news that we have out today is the housing market is officially in a recession. But let's break this down because the components are a little bit varied. If you're a current homeowner, you're in an okay situation. If you've been in that house for over 2 years, you've probably seen that value go up 20, 30%. If you're looking to sell into this market, you're facing more and more competition from existing home sales. But now there's a creeper coming up that we didn't really have in the past that we're having right now. That's the new construction properties, and that's what we're going to really dive into next. The data when it comes to new construction is really dismal right now. So let's go over the headlines that we see. We're in a housing recession, experts say. Here's what it means to homeowners, sellers, and buyers. We're going to focus in on the buyers that are looking to buy new construction properties. And here's where that data comes into play. You can see from the information July new home sales, and I want to make a big difference between new home and existing sales. New home sales are down 12%. That data just came out. The expected number was 575,000 units to be sold in June. We actually only sold 511,000. But the good news on that front so far still continues. House prices continue to rise. You saw the median price go from $414,000 to $439,000. That's an increase of $25,000. But here's the big piece of the puzzle that we want to focus in on. How much inventory? We know the demand's still kind of there. It's depleting rapidly, especially on the new construction piece, because people don't want to get into new construction loans because they don't know how long it's going to take the property to be built. They don't know if there's going to be any price adjustments. And the biggest culprit here is they don't know where mortgage rates are going to be. So people are backing out by the droves on a daily basis. But here's another interesting piece, because all those people are coming out of the market, is we're going to see that right here. Seasonally adjusted estimate of new home sales for the end of July was 464,000, a supply of 10.9 months. Now, I always talk supply demand. I try to just keep this to the basic economics. So how much is 10.9 months of supply? Is that good or bad? Well, we go over to what is the general rule, how much inventory is needed for a normal market. Well, in a normal market, we usually see 5 to 6 months of inventory. If you get over 6 months, it's a buyer's market. If you get under 6 months, it's a seller's market. Well, for the past year, 2, maybe even 3 years, it's been purely a seller's market. The tides are turning and turning fast. So my goal is to make sure you're educated and informed in real estate, especially the financing piece of the puzzle. So I want you to make a substantial difference between, if you're a homeowner today, are you okay? Yes, you're okay. If you're a seller right now, are you okay? Well, the competition's getting a little stiffer, but 40% of listings are still getting their asking price. The culprit here is if you're looking to build a property. If you're looking to build a property, the tables have completely turned from being a seller's market or a builder's market to now you being able to go into those builders and negotiating much better terms. And that's based on today's data. So this is the only economic news we have for today so far. So based on the information we have on home sales, existing home sales, and new home sales, what's the markets doing right now? So when it comes to home affordability, one of the biggest pieces of the puzzle is, we just went over where prices are, is where mortgage rates are, because that is going to determine if you can really afford those payments or not. So what I post every day this is a post from Mortgage News Daily. They post this every day and they update it throughout the day. I have the link down below. If you also want to subscribe to my newsletter, you can subscribe down below and you'll get this format as well. But what you're seeing on your screen is the top 6 mortgage programs out there. And again, these are the national averages posted by Mortgage News Daily. Here's what happens, just so you guys get a feel for what this rate consists of. Mortgage News Daily sends a survey out to mortgage lenders all over the country and says, if you have a client looking to buy a $500,000 home with 20% down, with a 720 credit score, and it's going to be their primary home, and it's a single family home, there's a reason I gave you all that data. Here's where the rates would be. And as you can see, the 30-year fixed, 15-year, 30-year jumbo, the 5/1 ARM. 5/1 ARMs, actually the adjustable rates are higher than the fixed rates right now, so why would you go with that? And then the 2 primary programs for first-time home buyers is FHA and VA. So if you'd like to find out more about, do you qualify for a VA loan? If you're a veteran, God bless you. We would love to assist you in that. But if you're looking to buy your first home, we would love to be your one-stop shop, that we can help and educate you guys on the reasons why maybe in a conventional loan is better for for you than FHA and the differences between the two. So we would love to help. To find out more about me and my team, all I need you to do is go to therateupdate.com, and you're going to find all your information about me and my team there. So God bless, guys. Thanks you so much for watching. Look forward to hearing from you. Bye-bye.